Good morning. Welcome to the B.F. Anderson Technical Report for April the 30th. We spend quite a bit of time looking at the past, looking at historic market activity using trend following. The accomplishment, or what we're trying to accomplish, is understanding human behavior because it seems to repeat. I go back to the 1930s, 1920s. And the market behavior and human behavior has a lot of correlation. So let's take a look at the charts and see what's going on here. Basically, you can see here on the NASDAQ, on the daily chart, we made our low around March 23rd. We've been rallying pretty much ever since. Now we've broken above the 50-day moving average and appears to be in somewhat of an uptrend. This is very positive. We're becoming a little bit more aggressive in our thinking. NASDAQ on a weekly basis, now this is the 35-week moving average, has now turned up. We are now in the third week above this moving average. The problem with the indicator, though, is that the Standard & Poor's 500 is not above the 35-week. However, if we do get 2 weeks of the S&P 500 going above the 35-week for 2 consecutive weeks, that will be a definite confirmation of our tides buy signal. Now, on a monthly graph, we're looking here at the small cap stocks. This is the S&P 600. You can see that we are trying to make progress, but we're not getting anywhere close to these moving averages. We are on a death cross, and they have turned down. But we are seeing improvement there. On a monthly basis on the S&P 500, we continue to be on a buy signal there. We are now above the lower moving average, and things are looking constructive. On the NASDAQ, we are on a buy signal. We are above both moving averages. The NASDAQ is clearly, which means technology, is clearly leading this market. And I'll show in a little bit here a little bit more about biotechnology. This is the golden dragon. This is all the stocks in China that trade here in the United States. We have recently gotten a buy signal, and the index is above the both moving averages. However, we're not seeing much of an uptrend here, but China has definitely shown some improvement here. Now, this is very constructive. This is the aggression index. Now, we're looking at this on a daily basis, and then we'll look at it on a weekly basis. But on a daily basis, it is the indicator, the ratio. Now, what we're looking at here is a ratio of technology stocks compared to consumer staples. When people are aggressive or investors are aggressive, they're buying the NASDAQ. So you can see here it's definitely in a constructive pattern. However, I would like to see this 50-day moving average turn up. Now, on the weekly aggression index, which is the same ratio, just looking at it on a weekly basis, you can see here that the lower moving average is turning up. This is definitely on a buy signal. Now, on the 3 economic indicators that we've been watching, one being interest rates, the 10-year Treasury note, you can see interest rates have somewhat stabilized at a very low level, not showing really any signs of rates going up. Then if we look at oil, which is a continual downtrend, been in a downtrend for, I want to say, at least 6 years. And as you can see here, it's trying to make a double bottom in the price of oil. Here are the small caps. Again, we are watching the small caps. We are seeing a much improvement there. Now, on the put-call ratio, which is fear-greed, we're starting to see some signs of some greed coming in here after seeing tremendous fear. So we'll keep an eye on this, but if we get back down into this area again, that would really be a time for caution. Now, we want to take a minute here and look at a very, very simple indicator. Now, first of all, at the top here, we've got the 25-day and the 50-day moving average for the S&P 500, and I mentioned earlier in the video that the S&P has not gotten above the 35-week. Well, the 200-day moving average is very similar to the 35-week. So we're looking like a move above the 200-day. Now, Ned Johnson, who is the founder of Fidelity, who hired Peter Lynch, by the way, who ran the Fidelity Magellan Fund, was asked one time if he had one indicator, if he was on a desert island and can only have one indicator, what would it be? And he said the 200-day moving average. So let's take a minute here and just look at some past activity and just remember what this looks like. This is you made your first low, you're now in an uptrend, haven't broken above the 200-day. Now, if we go back to 2009, which was the very difficult financial crisis, you can see here the market came down, it made a low, rallied, retested the low, actually broke below the low, but then gradually got into an uptrend, broke above the 200-day, and there you go, we were back into a bull market. So the 200-day is an interesting indicator to watch. Now here we have the year of 2003, just another bottoming process. As you can see here, we came down, we made the low, we rallied, we retested, actually broke below that low, rallied, pulled back, and then broke the 200-day, and then we were off to a new bull market. So the 200-day can mean something. Now, also I want to look at oversold and an oversold indicator, but it's interesting how 2009, which we just looked at here, this is 2009. This is 2009. You know, we can see here how the bottom was formed and then we broke out above the 200-day. Now, if we look at history, and what I'm looking at here is a indicator of the New York Stock Exchange stocks that are above their 200 exponential moving average. So it's like the 200-day. And you can see here back in 2009, we put on here a 4-week rate of change, and you can see what happened. I mean, it came down into an extremely oversold level where less than 10% of the New York Stock Exchange stocks were above their 200 exponential moving average. Now, there's only this is the only time in history since we've been following this that we got this extreme reading. Then the rate of change came in, and we got the double bottom, and then we took off. Well, here we are again. This is where we are now, and you're getting another rate of change, extreme reading that's above this line, as only other time was '09. So we're getting an oversold rally, but there looks like it's turning. This could be a V-bottom. Now, I mentioned earlier technology stocks. Well, the strongest group is clearly biotechnology. These scientists are working 24/7 on how to deal with this coronavirus, and these stocks have really taken off. The whole group looks very, very positive. So you can see here the S&P has not made a new high, but you've got the biotechs breaking out to all-time new highs. This is very constructive for that group. Now let's get into the top 5. Advanced Micro Devices just released earnings. I think they were a little disappointing. Stock did break down below the 10-day moving average, but this is a semiconductor, which is a very volatile group. This is Moderna, which is a pharmaceutical company that is working on a vaccine. They are in the second phase of the trial that they're doing. And you can see that the stock has been in a very strong uptrend. However, recently here did pull back a little bit below that 10-day. Should be watched. Here's gold. We're seeing a resurgence in gold prices. This is Newmont Gold, Newmont Corporation. You can see strong uptrend holding the 10-day. Here is Shopify. This is a retailer, software company that provides retailing services, so that if you want to have a store and be able to compete with Amazon, or actually go on the Amazon website. This is e-commerce. You can see the stock has been really taking off here, starting to stabilize and normalize here. Would be important that it hold that 10-day. Now here's Tesla. Tesla just reported earnings last night. They've made a profit. Very good report. Stock pre-opening this morning is up around 860, so it's going to be up in here if it opens at where it is right now. So basically Tesla, we've got the 10-day crossing above the 50-day. I'd like to see this 50-day turn up. However, it will turn up because the price is going to hold. But Tesla does look constructive. So all in all, what we're saying is we're seeing improvement. And we look like we could be in the resumption stages of the bull market with a V bottom, but always aware of the fact that we could retest like we've always done in the past. Thank you very much. Any calls I would appreciate.